Let's move on to the other, the big one, of course, which is the impact of Trump tariffs on India, economy-wise, sector, industry-wise, etc. as well. We have Mr. SC Garg, former Finance Secretary of India. We have Mr. Najib Shah, former Chairman of CBEC, joining us now to run us through what they are making of things. Gentlemen, good morning. Great to have both of you here. Mr. Shah, if I can start with you, sir. You know, in that article that you wrote for us for CNBC-TV18 early March, you had kind of said that, you know, FTAs perhaps are being talked about, negotiated. But at that point, you also said studies which are in the public domain show that India's exports to FTA countries don't necessarily outperform, you know, growth otherwise. We have the tariffs now. They are much higher compared to general expectations, although many are now pointing out that other countries are worst hit. So that perhaps at the margin is the only silver lining. How are you looking at this entire thing?
Times ahead, difficult times ahead. What I had mentioned in that article was basically the Niti Aayog study itself, which pointed out that India's exports under the FTA to ASEAN countries specifically had not really shown the sort of export benefits which we anticipated when we went into the FTA. So one was only telling that you go to FTAs with caution. And currently, the silver lining, apart from everything else, the other countries being impacted with higher tariffs, is that pharma is not there. Textiles are another area of strength for us. Bangladesh and Vietnam seem to be having a higher tariff as of now. But there's a great amount of uncertainty. And I don't think this helps business, this helps trade, this helps the Indian exporters. He'll have to factor how much pain he will absorb to ensure that he doesn't lose his market in the US. A lot will depend on the discussions which seem to be ongoing between India and US, and how much India thinks we will concede to ensure that our exporters do not suffer a very bad deal when they enter the US markets.
Absolutely, Mr. Shah, points well taken. We need to understand now how much of this 27%, which is the number that's been given to us, how much of it can be realistically negotiated down, because back-channel parlays would still be on, you know, as we thrash out the terms of the new bilateral agreement. So, Mr. Shah, what would you say? I mean, given the different tariff lines, the different product lines involved, what can we expect?
Focus on specific commodities where we believe we need to export and not lose our export share. So which means if, for instance, take for instance engineering goods and engineering products, if we believe that that is a market we don't want to lose, we should, if necessary, reduce the tariffs on that specific commodity. Go tariff by tariff, commodity by commodity, rather than look at an overall reduction, because I don't believe that we should violate our MFN principle. We should ensure that whatever we agree to reduce for US is applicable to imports for all countries, and negotiate accordingly with the US. That's the only way I think we should go forward, and our exporters need to brace up for challenges.
But Mr. Shah, you know, and help us understand this, because that's where the complexity is arising. Let's take, for instance, the sectors which are very important for us from an export standpoint, which would be pharma, which would be electronics, which would be textile. Now, these are not very heavy import sectors. We don't import a whole lot of pharma or textile, or for that matter, electronic components into India. But is it really item by item or segment by segment? Because what seems to have happened is that they've taken the overall trade deficit into account and then arrived at a number. So how does negotiation happen when you're talking about the total trade imbalance versus sector by sector tariff lines?
Keep reminding them that the president started off with reciprocity, which, of course, nobody knew until last night what reciprocity meant. We assumed that it will be item by item or sector by sector, and not a blanket 27% across the board. So we need to remind them that, look, if your concern was this particular product, here we are reducing this product. And like you rightly pointed out, these are not import-dependent commodities, textiles or electronics. But nevertheless, our tariff structure is still higher than what US is imposing for corresponding imports from India. So that's the only way we need to negotiate going forward. And and hope that we are able to persuade them, because this 27%, as rightly pointed out, has been arrived at a completely fairly arbitrary manner. Exports, you see here exports to India, see here imports from India, and you say it's 52 and divide that. He kept announcing 26, the next year talked to 27. So I assume there won't be any further changes, and 27 is what it is. So I think there's the only way to go forward, because there's so much uncertainty right now. And since parlays are going on, we need to understand from them, how do we address those concerns of them without losing focus on what is needed to protect our own domestic industry, what is needed to encourage our exporters.
No, even if there was that weighted average formula which many were expecting, even if those who were not expecting sector by sector but a weighted average overall tariff rate, this 52% is got nothing to do with tariffs per se. It's basically they're targeting the overall imbalance and saying, well, this is because of everything in it. And as you said, keep reminding them. The only thing is that I think we'll have help with all other countries also reminding them that this was about reciprocity. This is not just, this is, and I think others perhaps also in that same boat. Mr. Garg, come in here on this discussion. Your first thoughts, sir, impact and what can we do? Mr. Shah earlier said FTA is, of course, work in progress, but we need to enter those cautiously and carefully because we have data which shows they don't, outshine growth otherwise. I mean, FTAs them by themselves. Go on, sir.
See, Prashant, I don't think this whole issue should be seen as a bilateral issue. There is a massive restructuring of the post-World War II global trade and the tariff structure going on in the world. Trump has taken all these measures with a view, with the objective of making America a manufacturing nation again. And as you have rightly pointed out, he has worked out that how much per unit we pay as tariff to whoever we export, and what they pay to us when they import from that country. And therefore, going forward, what a particular country, let's say India, can do is not dependent upon between US and India. It will also need to take into account what Vietnam or what other countries would do it. See, if you have seen it carefully, only two major industrialized and high-income countries have suffered very high tariffs. That is the South Korea and Japan. Because South Korea, earlier a developing country, was sort of having much larger import tariffs than the developed countries or industrialized countries had. They have not changed the tariff. They have not reduced, despite having become a very industrialized country in itself and exporting massively to America. Same is relatively for Japan. So what will need to be done going forward, to my mind, is to watch how these countries react. My own sense is that a country like Vietnam or Thailand or South Korea or Japan, for that matter, including China maybe, because they don't need those high protective tariffs any longer. It's actually a legacy issue why there's so much high tariffs. They don't need it. So will they now roll back, reduce their tariffs? I expect Vietnam to do it very easily. If they are charging about 92% tariff on American goods to them, if they reduce it to 9% or 10% or 5%, I don't think Vietnam economy would suffer at all. And if that happens, or Thailand does it this way, India cannot simply look at that bilaterally, goods by goods or sector by sector, we'll negotiate. I don't think Americans have patience and the time to do these bilateral negotiations. We'll have to also see whether we can take broad brush calls. And here, again, if you analyze the Indian basket of exports to America and American exports to us, I don't think we need to have such high tariffs at all, whether it's agriculture or whether it's industry. So slash the tariffs down massively. The Indian industry might suffer some short term, but Indian consumer will not suffer at all. I think the time has come to join in this it's big reordering of the world trade and the economy which is happening.
No, absolutely. But what's also happening alongside, I mean, this is reciprocal tariffs we're talking about, alongside, there's a lot of pressure from the US to open up products like automobiles, right? And you know, that throws up a big question mark on domestic manufacturers, domestic OEMs, etc. So that pressure on defense imports, on auto imports, that's a separate part of the conversation. And Mr. Shah, maybe if you could come in on this, on whether there is a greater threat for domestic industry than what meets the eye this morning?
It depends entirely on the import components of the export product or the import components of the domestic manufacturers. Fortunately, very few sectors really are dependent on American imports, which is why our trade balance is so healthy. So we can identify specifically those industries, those products, those components which go in the manufacture of such goods, and look at those. So I don't think the Indian exporter is at a greater threat because of the fact that the American market is a big market, is a consumer's market, rather than the Indian manufacturer, because of the fact that our imports from America, which go into the manufacture of other products in India, are limited. Are lesser.
Till now. So that's the question, till now. But, you know, for instance, I go back to the auto example, and the US president on numerous occasions has been hitting out publicly, saying it's impossible to sell anything to India. Look at their car tariffs, look at their auto tariffs. So if India, and to go back to Mr. Garg's point, maybe Mr. Garg, if you could come in, you're saying India needs to have a far wide-reaching sort of thought to this. But if India were to start opening up, in sync with what the US wants, this could be pretty damaging for domestic industry, wouldn't it?
Automobiles, which you just said. In automobiles 20 years, 30 years back, we perhaps needed some protection. But today, compare the prices of a Tesla being manufactured in America or Tesla being manufactured here. It makes hardly any difference in cost, because so much of automation, robotics and other things have taken place that in automobiles, the labor advantage is completely gone. Even today in EVs, etc., many of the components, engines and others, you are in any case importing. So I don't really see any threat if you reduce the 60% tariff to 10% on automobiles. I think we need to get out of this unnecessarily overprotective mindset. It's not required any longer. Why should American almonds or apples have a higher tariff than Afghanistan or Iranian almonds? What is the problem if we have the same tariff?
Mr. Shah wants to come in, I think. He's shaking his head. Mr. Shah?
No. The rates of, we don't have any US-specific tariffs, Subhash. All our tariffs are MFN, except where we have a FTA, which is WTO compliant, and which permits us to have this reduced tariffs in respect of those countries with whom we have a free trade agreement. Otherwise, the tariffs are common across the board. So if you're going to reduce tariffs for any product which is coming in from America, it'll apply across the board for all imports coming in from all countries, which is the principle of MFN, as you are more than aware. So I think auto sector specifically is a sector which, because of protection, has gotten investment into the country, and we are an export country now. Hyundai and Nissan and Volkswagen, everybody exports from India. So I think auto sector has reached maturity. So with Mr. Subhash Garg, and that perhaps you can look at some reductions.
Yeah, no, I just want to ask this quick question. We're out of time, but say, Mr. Garg, you said, say, for example, countries like Vietnam, you expect them to drop tariffs substantially. They don't need it. It is a legacy issue. But as someone is pointing out, tariffs that Vietnam imposes on the US actually are already low. But since this number, as we began this conversation by saying, is based on the total trade imbalance and not the rate, then how do you get out of this? And that has got implications for a lot of companies here, right? Because A lot of companies are saying that others are being charged at a higher tariff rate. So maybe in sectors like textile, we may not come out on top, but it's less negative in that sense. So 30-second response, Mr. Garg.
No, I think we'll need to figure out. My sense is per unit tariff has been compared, not the trade balance. Trade imbalance you can never deal with.
No, Mr. Garg, that is the whole point. They are taking they're taking the trade imbalance. So actually, I mean, I'll share later after the show. I'll share the details with you. What in the case of India, that 52% number which has been calculated is also basically the deficit by imports. That's how they've got to that 52% number for all countries. So essentially what the US is saying, you've got to wipe out this deficit clean. That's the only way you can get out from under this.
I think if this is the case, like we export about 85 billion and they export to us about 42, and the difference is divided by the total. If that is the way it has been calculated, this is stupid. It is
stupid, but it is what is. That's what everyone is saying. That it is. It is. Now, I think now we've got to the crux of the conversation. so then, how do you? If this is the way it's been. Now, by the way, it's been now confirmed, Mr. Garg. I think there is a statement which has come in, and I just want to read that to you because I think it's important. The White House has now confirmed this. They're saying the specific reciprocal tariff rate was half of the current trade imbalance. Because the president is lenient and blah, blah, blah. But then they go on to say the numbers have been calculated by the Council of Economic Advisors based on the concept that the trade deficit that we have with any country is the sum of all trade practices, the sum of all cheating. End of quote. So this is what it is. They're confirming this.
No, this I would interpret as the sum total of the tariff and non-tariff barriers, etc. That everything boils down to ultimately the deficit, which is fine. But deficit is not equivalent to the difference in the tariff.
But that is what they're saying. That is exactly how that's how they're getting to that 52 and then 26% number.
We'll need to check this. I don't think you are leading to a situation where American tariff on India or Vietnam or China for that.
I think we lost the line there, Mr. Garg, if he's going to come back. But Mr. Shah, if you want to respond to this?
No, I think what you, I agree with what you're saying. That's how the US has worked on it. I think it's pretty, I mean, I don't know whether this will help them in any which way to bridge the gap. God bless them. But I think this is a challenge we have to encounter, we have to face, and hopefully, wider council will prevail as we go forward, and we'll be able to, negotiate a way to a more reasonable sort of a tariff. The point being that they are going to impose tariffs on us. We have got to live with it and see how best we can help our exporters continue to remain in the US markets.
So, Mr. Shah, to sort of come to final thoughts, definitely.
By the way, Surabhi, there's breaking news. I don't know what the source is. Vietnam cuts all tariff on US goods.
There we go. What Mr. Garg was just saying.
But again, the tariffs, the point is that they want to, US is saying we want to wipe out the deficit.
Trade deficit. So even if you cut your tariff to zero, that's the point, gentlemen, that you can cut tariffs to zero. But if the deficit is still what it is, then that cutting the tariff doesn't matter. So,
yes, you can
Mr.
go
Garg.
back to America to tell them that you can't be more stupid. We have done zero tariff now. You can't impose.
Now what? Yeah,
exactly.
So, which is
so this is exactly the response which I was expecting from the countries like Vietnam and others. That all right, we will charge you zero. Now export to us. Exporting to us is not our problem of importing from you. Exporting is you manufacture, export. That is the way.
So, Mr. Shah, in light of this and with this news coming, and I think the point that Mr. Garg was also making, that this could become another bargaining chip. The US trade reps could say, this country is cut down to zero, this country is cut down to 5, this country is cut down to 7. So why isn't India cutting down? You also need to cut down. That's one part. On the exact tariff number, but no matter what you cut down to, that number becomes irrelevant, right? If you're still running a trade surplus with the US, the US will anyway not be happy. So what would your advice be to Indian negotiators who have been spending many a sleepless nights and continue to do so?
We look at all the items we want to buy from US so that we can cut down our trade imbalance, because ultimately there's the only way to breach this sort of a gap. And if this is the attitude which they are going to adopt, there's no other way in which we can breach the imbalance. So look at all items we want to import from there and bargain for a good rate for that.
Obviously, they don't want to wipe the slate clean. I mean, how can that be, right? That's not possible. So the only explanation is that they somehow wanted to get to 50% or maybe very high levels to start the negotiation and then maybe bring it lower. Maybe that is the only explanation. Otherwise, how do you... There's no way out. Mr. Garg, you want to comment? Sorry.
There is another way, which is most likely to happen. If these kind of absurd tariffs stays, the American imports will simply get down, will get reduced, will get obliterated. And then you don't have the trade deficit or something. Suppose the Indians don't export to them, or Indian goods are not imported by Americans with this kind of tariffs, or Chinese goods are not imported, the deficit goes away.
So another thought, Prashant, here I'd like to leave you with. It was supposed to be reciprocal, right? So if Vietnam has cut down to zero, then you should also cut down to zero. Let's forget the trade imbalance issue, right? It was supposed to be reciprocal tariffs. You are zero, I'm zero.
They've cut tariffs on all goods. I don't know how much. And as I said, I don't know the source. So I'm asking the team to check. But yeah, I mean, at a point...
The concept of reciprocity would be equal.
Serious economists have also pointed out, of course, before this happened, that actually, if, you're asking everyone in a reciprocal way to bring down tariffs, if everybody reduces tariffs to a certain level, actually it increases global trade. That is also one point of view. But doing it like this, it's like I'm not sure, but has to be opening gambit in terms of negotiation more than anything else.
I want to sort of take out the silver lining in all this. Perhaps, and gentlemen, weigh in on this. Perhaps they started with the, calling out this tariff war, and somewhere down the road they realize that what's more important is not tariff but overall trade imbalance, which can still be addressed. It depends on I import some from you, you import some from me, and therefore there is a trade surplus or deficit. So perhaps if that is the way the US is thinking, then that does open up room for more negotiation, for protecting, India's interests versus maybe giving in to some American, pressure points like bourbon whiskey and, like, of course, the Harley Davidsons. Mr. Garg, you coming in.
I just wanted to say one more thing. See, the days of FTAs, bilateral negotiations, regional negotiations are all gone now. With this kind of thing coming in and the world becoming a one single manufacturing global entity itself, the national manufacturing, etc., and in a situation where there is a global surplus of supply of industrial goods now, the time has come to virtually do a very fresh thinking on the entire tariff structure. Maybe like domestic economies, we have abolished the duties on interstate kind of thing. Globally now, the time has come to do away with all tariffs everywhere, except a small list.
It was called tariff, the most beautiful word in the world. So I don't know, it's going away. Anyway, Mr. Shah, just last word, sir. This uncertainty cannot linger very on, even from the US side, right? Because then how will anyone plan, invest, etc.? So it's counterintuitive, but what has been imposed in that sense, there has to be some sense of permanency here. This is it. It's high, low, whatever, this is it, and that's how you got to plan and move ahead. But there is also the part of negotiation. Do you think it'll all happen very quickly? And then it gets settled, because you can't linger, it can't linger on for the next, months. Yeah.
I really hope it happens quickly, because like you rightly pointed out, this will hurt everybody. Forget the American consumer, forget the American manufacturer. We are concerned about our domestic industry, domestic exporters. It will hurt us a lot. The exporter now will pause, will wait to see how things are panning out, because to say that President Trump is mercurial is an understatement. Things could change very rapidly and dramatically because he feels that he has got what he wanted to, and he may again, say that India is not so bad a country after all. We do not know. So I think it is I hope it is a short-term pain which everybody has to endure. Uncertainty is not good for Indian business and industry. Our negotiators are continuing. I'm aware of the fact they're continuing the negotiation. They should continue to impress upon them that we can look at items and reduce wherever tariffs are required. This Vietnam story is very interesting. One would need to confirm that is indeed so. And like what was pointed out by your colleague, if reciprocity is what was started off with, the US ought to be reducing accordingly. And if that happens, that will give us again an entry point for us to say that, look, these are the products we're reducing. Kindly ensure that you reduce accordingly. But if they're working on the principle of trade imbalance as the reason why they have arrived at 52 and 27, then we need to again relook at how things will go forward.
Absolutely, gentlemen. And I think that's the learning this morning, that two different principles have collided in the last couple of weeks. The principle of tariff reciprocity and the principle of a trade imbalance. And I think somewhere it's all gotten muddled. Hopefully in the coming few days and weeks, sooner rather than later, we'll have more clarity on these issues. Thank you so much for weighing in on what has been a really, really chaotic and busy morning. Thanks for joining in.